We've got market watcher Scott Shellady back with us. We've got also Shell Oil President John Hofmeister. Gentlemen, I'm very, very sorry for that. My confusion, no one else's, but I'll blame my producer. All right, so Ralph, you might want to take note there. Just pack up and say bye-bye. All right, Scott, I was talking about the retail thing because to me that's the most fascinating thing that's been going on here. And the retail thing says consumers are optimistic, and they are proving it by going to the store again and again and again. What do you think?
Well, it's 100% true because we've moved this economy from like an Eeyore economy from Winnie the Pooh, right? Woe is me, how bad can things get? He's changed psychology, really. And the reason why he's changed psychology is a lot of retailers are out there and consumers are out there have said to themselves, well, that's a good idea, I would have done that, and that's a good idea, I would have done that. He's not reinventing the wheel. He's talking to the average person on the street, and everybody's now slowly but surely coming around to the fact that, hey, that's good for the economy, that's a great idea. Why haven't we done that before? These aren't new ideas. He's just actually putting them in place, and that gives everybody confidence, from the CEO to the guy that was shopping at Walmart over the last 3 months. That's the really big deal here. It's psychological. That's why there's 50 books written on how to tame inflation and only one book written on what to do to get yourself out of deflation, because deflation is a psychological issue, and the president has been able to conquer that.
You know, Don Hofmeister, so the one thing that could get in the way of that fair and balance is the fact that gasoline prices have been ticking up a little bit. They bounce around on it, and it takes away whatever those consumers, those shoppers are getting with the tax cuts. And depending on the group and the sector and the demographic, some get more than others. Are you worried about that?
I am worried about that, Neil, and I'm getting more worried as time moves on, because the reality is we haven't invested in new oil to the extent we need to invest in new oil. And so that's going to be problematic. And upcoming, we have the Iranian sanctions that may take some oil off the market, which could make it even more expensive. So the last thing we need is high-priced gasoline that would really, in a sense, deflate some of that economic prosperity that you're talking about.
You know, Scott, if I could switch around just a market read, is it your sense we don't need a big deal on trade with China or a big deal on trade with the Mexicans? Well, I know the president sort of posits if I don't get something I like, I won't do it. But that anything would be greeted, I'm only looking at this through the markets, as a win, and they'll like it. It will take an uncertainty away, and they'll continue to be off to the races. Or is all that factored in?
Some of it's factored in, but you already mentioned what the right answer was there, and that's just certainty. Right? They just want some certainty. What are the outfield walls going to look like? How far do I have to hit it to get a double? That's all that these CEOs want, and that's all what the average American wants. Just some certainty, because this is going to go on longer than a day and a day less than forever. The volatility is in between. We just don't know what the world looks like until we get some certainty. So it's all about the certainty, and until then it'll be a little volatile. And the shorter that we get something, the better it is for him. The longer that takes, the worse it is for him.
You know, it's also a matter of time, right, John? I mean, whether you're talking Iran and everything else, whether you're talking, trade and everything else, some of this is outside your field, I grant you. But if we don't have some sort of closure on some of these issues soon, let alone the midterm elections, what do you think happens if the president gets what he wants, but it's significantly delayed? It doesn't happen within the next few weeks or months.
Well, it's really critical for voters, for citizens, to understand what's really going on. And the more we can focus, and I think, frankly, I'll compliment you, you do a great job of explaining things, but are enough people listening to you? And I think the whole notion of how energy affects the economy and how many people are trying to stop the flow of energy because they don't believe in the current kind of energy. They want to stop the flow of energy, whether that's getting in front of pipelines or getting in front of other new investments. We need those. It's a way of life. We live a high-energy life, and so I think we need to work on what energy mechanisms can we accelerate, such as alternative fuels. And I don't want to go down that path today, but we need alternative fuels to gasoline to try to make the energy more affordable for longer times. But people need to understand why it's happening and what it's all about. And that's not, you don't have to bring in the politics of it. The politics of it are the death of energy.
No, that's a very good point. I try to avoid the politics of it because people say, oh, this, then one of that one. I really don't care. I follow the money. And, one of the things, Scott, that you can argue is that consumers buy or do anything pretty much based on the confidence. I talked to one couple I was mentioning earlier. They were not big fans of this president, but their son, who graduated from college recently, has very, very good job prospects. First time they've seen that. They're very optimistic. They still don't flip over this president, but they do flip over the economy he oversees. And I don't know how that translates to voting in November. There's no way of knowing. But I do know that when people feel that confident and feel that optimistic, they tend, to your point, to go out and buy. Now, the question I had for you regarding this market is kind of like the question I had for Macy's investors who were pouncing on that better than expected news, but the stock still sold off. I know it ran up a lot ahead of that news, so you could be buying on the rumor, selling on the fact. What are people doing now?
Well, you're right. Those retailers had a decent run up, and they have sold off. But the difference between, say, those and a Walmart, or even a bigger example is Amazon, is like, who are the customers of Walmart, right? It's all of us. It's everybody. And then that's also online, and that's also bricks and mortar. So they have such a broad reach, and their markets are so big that you're not going to see somebody not go to Walmart because we've got a problem with some Chinese tariffs, right? The market is so big, and their customers are so vast.
But if you're remotely uncertain, you're going to hold back, right?
No, I don't. Yes, you're right, because the psychology is the number one thing altogether. We can all forget about politics. We can forget about anything else. Psychology is number one, and my pocketbook is number two. So once the psychology is done, and I think he's done a very good job of that, now we have to look at our pocketbooks. And I do think that resonates. And at the end of the day, if you're better off than you were 4 years ago, you've heard that before, that's going to make for a big difference when it comes to elections.
Guys, you're both great. I apologize for getting to you so late and confusing when I would get to you, but that's all on me, and I want to thank you both for your perspective. Again, what I find fascinating, markets are the darndest thing, folks, is that you think about it, people are betting with money, and by the way, it's oftentimes your money, where they think this economy is going. Now, they make wrong hunches, the wrong bets. Remember, in the fall of '87, a lot of them were buying willy-nilly, and then they made wrong hunches, and of course, that brought us October 19, 1987. So they can be wrong. What they're doing now, and the reason why you see 29 of the 30 Dow stocks up, is they are convinced this backdrop we're getting from Walmart and from the American consumer is such that they are putting down their own money. So when they see consumers plunking down their money, for the most part, they're willing to plunk down still money in the stocks in which they're investing. It gives and gives and gives.